Hi everyone, thank you very much for joining us and tuning in. What we'll be doing within the next 8-9 minutes is we'll have a look at the UK unemployment rate economic data really. So I'll cover the fundamentals and my colleague Thomas will have a look at the technical side of things. So let's start. Now, James Picerna, who is the editor and analyst at capitalspectator.com, shared interesting ideas that we're going to discuss on the webinar right now. So today's release is expected to bring another round of encouraging news. Unemployment in Britain is projected to slip again, dipping to 6.8% last month from 6.9% in March, according to the consensus forecast. More importantly, some economists believe the number of claims will continue to slide, falling by a healthy 30K. But good news in the labor market will be filtered through rising suspicion that the Bank of England will be forced to raise interest rates sooner than previously assumed. The leading now catalyst is the accelerating rise in house prices, which increased 10.9% in April versus this year earlier level, according to the nationwide data, the fastest pace since 2007. If you can hike the double-digit house price inflation in the strong labor data, when can you? Noted Scotland's chief of fixed income. Let's have a look at the potential forecasts as well. Let's just pull up those figures. As you know, Bloomberg always conducts interesting polls among leading academic experts, and here we have 10 out of 32 who were actually surveyed with regards to the upcoming data release. Now, what we should also mention is that there's a growing view that we'll see a rate hike in next year's first quarter. Although a surprisingly strong update on the labor market in today's release may inspire a new set of forecasts. For additional perspective, we're also going to be, you can also have a look at today's inflation report from the Bank of England, which will include a new set of economic predictions that may alter the outlook for the timing of changes in monetary policy. And let's, of course, also have a look at what Dukascopy community members and traders have to say about the potential impact on the Great British Pound USD. So as you can see, 67 believe the impacts will be bullish, those represented by 42 voters, and 33 or 21 voters will have the view that the impacts will be bearish. Some of the comments that they provided in order to support their views. Now, for example, Dristy here says unemployment rate dropped to 6.9% last month, and another most important economic indicator, employment count change, also dropped to minus 30.4K. Now, this month I expect that another decline is possible, which is a bullish sign for the Great British Pound. And a contradictory comment is provided right here by another community member. ILL unemployment rate is the lowest since May 2009. And another employment indicators in the UK are showing an optimistic view of the British economy. Everything points in the direction of a continuing trend. The question is, what are the markets prepared for? The pound rose approximately 40 pips during the evening, so my guess is a bearish move, minus 10 pips for the pair. Now, these were the fundamentals that we thought would be important to share with you today. And now my colleague Thomas will have a look at the, again, technical aspects of the upcoming data release and potential impacts on the Great British Pound.
Great day, and you can see and hear me well. What I'll be doing today, I'll be presenting a possible negative surprise trading strategy. Shortly you will see why, and I'll be doing that on the Great Britain pound United States dollar. So first of all, it will be done so because market expectations is actually pretty one-sided, and we can see that 71% of Dukascopy traders are expecting depreciation of the pair, 58 to 57, around 60% of pending orders in various ranges around current market price are set to go short as well. Besides that, Great Britain pound is being sold in 64% of the cases, showing overall attitude of the traders in the market, and United States dollar is being bought in 65% of the cases. And we also can see that Oanda traders, Saxo Bank traders, and Daily FX community members are actually having very similar expectations of Great Britain pound losing ground against the United States dollar. Now let's take a look into the technicals, what they are predicting for us. What is, let's say, what works well for us in this case is the fact that neither the RSI or stochastic actually show the pair being oversold or overbought, so we should expect a rather clean reaction in a sense from the data release, so the pair shouldn't be pushed or subdued by this aspect of the markets. How we can see that in the most relevant horizons for us, the minute and 30-minute horizons, the technical indicators which predict and show the direction and the strengths of the trend actually have a bullish reading. So I guess that could be explained by the fact that the pair has been appreciating since, let me just double check. Actually, we saw a strong appreciation of the pair lasting since yesterday, 8 GMT in the evening, till today, 5 o'clock in the morning GMT. So afterwards, we can see this rather volatile period of trading. So the pair trying to find its range in trading pretty much around the 20-day simple moving average, which seems to be working as a rather strong anchor point for the pair at this very moment. So the strategy itself is to sell at market price. So I guess the area above the 20-day simple moving average, above 1.6860, is actually very good and favorable for that. Stop loss could be put in the area starting from 1.68 to 70 and until 4-hour R1 at 1.6873. And actually we're seeing that the pair is being, at the moment, is testing this area and seems to be trading, trying to consolidate above it. So I guess it might be also a rather decent sign of traders trying to enter short position at slightly higher price, and therefore enter short positions at the slightly higher price, and therefore book higher profits. And for us, the take profit is actually set at the 4-hour S1 and 1.6849. So we're seeing increased volatility in the market. So in the past, actually minute, the pair has been traded in 16 pip range, and we can see rather not one-sided releases, not one-sided trades. So I guess we already touched actually and breached the take profit. Just need to see the data. So yeah, unemployment rate 0, unemployment rate 6.8. So as expected. However, I guess the losing ground against the United States dollar is coming from the fact that claimant count change missed the expectation by 10,000, and therefore we could explain the fact the reaction of 27 pips, and actually the pair went as low as 4-hour support at 1.6837, and 4-hour pivot at 1.6837. I guess we could see it dipping as low as the current daily low at 1.6828 in the next upcoming 5 to 10 minutes, and afterwards I guess we could start looking and expecting something around 1.681, 1.6 68, these two levels to be tested, and traders trying to push the pair as low as that. And of course, nonetheless important thing would be the also what went with the average earnings index as well. With this also pretty much the overall range of data actually might have proved to given the momentum for the Great Britain pound and in currency pairs, Great Britain pound, United States dollar being so volatile, actually we could see average earnings index also missed the expectation partially substantially by 1/4 of the level. So I guess that would be all for the time being, and if the pair won't return above the, I would say, daily pivot point at 1.6845 in the next half an hour, we definitely could expect it to trail lower, and we should start looking at 1.68 in the course of the next day or so. So I guess that will be all from my side at this moment. I hope you really found this useful. So for the time being, I will leave the screenshot of the market for your further use in the analysis, and on all the slides. You're more than welcome to use all the slides and all the info for your own benefit. And yeah, that'll be all from my side, and I wish you have a nice day, and give floor back to you, Gita.
Awesome job. Thank you very much, Thomas. That is it for today's economic data release. But be sure to tune in today at 12 GMT for our Dukascopy research webinar, where we'll be having a look at some top news headlines, and we hope that you can make it and engage and take part in our discussion. Thank you, and take